First of all, thank you for all your presence today, participation. Welcome to our venue and also this fireside chat. Our topic in this room is facilitating measures on promoting family office in Hong Kong. So I'm Dixon Wong from Family Office team and also Financial Services team at InvestHK. Sitting next to me, there are 5 distinguished speakers, and actually, I think professional services and also the industry experts. I think Karina, next to me, is a tax expert who is coming from Ernst & Young with a lot of focus on the recent tax transaction for single-family office. So she will be able to share with us the insights on this particular area. And Jing Jing, who is also a lawyer in the professional services industry with a focus on fund, and also he is a co-founder of the LPF, Limited Partnership Fund Association in Hong Kong. So he helps a lot on the LPF registrations in Hong Kong. And next to Jing Jing is Andrew, as well as Jefferson. They are both from the market practitioners. Andrew is actually a partner of Liner with a focus on many different products across financial services, helping family office to invest, as well as helping them to onboard. He will be able to share with us how family office is interested and how to leverage the industry to grow in the city. Far end is Jefferson. He's a CEO of Fargo Wealth Group. Fargo Wealth Group is actually a family office incubator with full services providing support and advisory on family office and also the newly EAM business on board in Hong Kong, covering licenses and also facilities, providing different types of services to help them to grow here in the city. Again, I think our topic here is family office. So I would like to probably set the scene. I think we have a very strong support from the government in the last 24 months, despite the fact that COVID situations that we've been suffering, we might not be able to travel very actively as before. But the Hong Kong government has put in place a number of new measures, including the Limited Partnership Fund and also the Connect schemes in many different aspects. As well as the latest initiative on the single-family office tax concessions. So I think on the basis of this, also we have the Greater Bay Area initiative. So there are a number of positive sides on this particular segment. And according to the latest BCG report on the wealth, I think probably I just got that data recently, so I need to read the numbers just to make sure I say the right number. So I think the BCG report in its Global Wealth Report 2022, this is, Hong Kong is expected to take over Switzerland to become the world's largest cross-border wealth management center by AUM in 2023, so next year. BCG forecasts that healthy inflows to Hong Kong will be kept at an annual growth rate of 9% from now through 2026. So obviously, I think on the basis of that and the fact that GBA has an affluent population, and GBA according to the number I record, is 20% of the overall mainland affluent populations, ultra-high net worth individuals, they are sitting in the Greater Bay Area. So 20%, and the rest of 80% is spread around mainland. So meaning GB is a great initiative for us to leverage. And the fact that I think with the latest measures on many different things, LPF, tax transaction, and also the connectivity with mainland, like the Bond Connect, GBA Connect, as well as ETF Connect. So I would like to invite the speakers sitting next to me to share the insights. Probably maybe we start with Jing Jing, because I think LPF in Hong Kong has been operating, if I recall, is over 2 years, slightly over 2 years. And Jing may be able to share with us what's going on with the LPF, what's the number, how easy it is, and what's the pain point. Over to you, Jing.
Thank you, Dixon, and good afternoon, everyone. It's my pleasure to speak here and share my views with everyone. I didn't expect it's a full house, so thank you. And even someone pregnant is sitting there, so thank you as well. So, I mean, today's topic is family office, and certainly family office is closely related to fund management, asset management. According to the UBS Global Family Office report last year, I think globally the family office, they invest in like 20% of their assets in private equity and nearly 10% in hedge fund. So funds definitely it's a big part of family office. And in the webinar that the 2 o'clock webinar we just shared, is talking about legacy preservation, and I think one of the important aspects is also the preservation of wealth and the growth of wealth. That's also one of the main purpose of family office. So and if you look at, I mean, in these 2 years, everyone is talking about Singapore, and one of the most important reasons Singapore's family office is increased dramatically last 2 years is because they have the VCC structure, which is also a fund structure. So I think in Hong Kong in the last 3 years, the Hong Kong government rolled out a series of measures to promote the asset management industry, which also help to build a more sophisticated and friendly environment and ecosystem for family office. In 2019, I think Hong Kong adopt the Unified Fund Tax exemption scheme, so under which both onshore fund and offshore fund, if they qualified, they will be exempt from their investment income and returns. In 2020, LPF was rolled out, and the SFC relaxed certain investment restrictions of OFC, and since then the OFC also took off. So last year, the carry interest scheme took effect on the 1st of April. Karina maybe may touch on that point later. And also the government gives subsidies to people who set up OFC and the REITs. And also the redomiciliation scheme was put in place as well at the end of last year. And this year, of course, Karina will talk about the proposed tax, which will apply to single family office. So with all those measures put in place, Hong Kong now becomes one of the favorite the funds set up place, one of the hottest place to set up private equity funds. And the reason is that under those regime, it's much cheaper and much more efficient to set up and manage fund out of Hong Kong. And we do the calculation, if managing a Hong Kong fund, the cost is roughly like 20 to 30%. The annual cost is 20 to 30% of the cost of setting up and maintaining a Cayman fund or a Luxembourg fund. And also at Hong Kong, because the reasons to set up fund in Hong Kong also, it's also important because a lot of assets are based in Hong Kong. According to the SFC's report issued in July this year, the amazing thing about Hong Kong, about the asset management in Hong Kong is more than 50% of their money, which is 3.5 trillion Hong Kong dollars, more than 0.5% are invested locally in Hong Kong. So it's not like you're going to open an account in Switzerland, open an account in Singapore, but you don't really invest there. You just have an account there, but you still invest in Hong Kong and other places in the US, in mainland China. So the amazing thing and the most competitive part of Hong Kong is you set up the structure here in Hong Kong, you maintain a team in Hong Kong, and you manage most of your portfolio in Hong Kong. So that's why I think Hong Kong become more attractive, and also the numbers can tell. I mean, as Dixon just mentioned, the LPF was in existence for just a little bit more than 2 years, and there are already more than 550 LPF set up. And the OFC, since the government give the grant, which is $1 million, 1 million Hong Kong dollar, if you set up a fund, which that's a maximum amount that they can reimburse you. So basically, they can reimburse 70% of the setup cost, up to $1 million, if you set up an OFC or redomicile your fund from offshore jurisdiction to Hong Kong. And since that, the number of OFC grows 7 times in a year. So I think from 13 to nearly 100 until the end of September. And the number of sub-fund grows to nearly 180 sub-fund. So that's really, really fast growth. And we can see a lot of fund managers, not only local or PRC background, but also international managers. They set up retail fund, authorized fund, ETFs using OFC structures. So as we can see, those structures are becoming more and more popular and more and more recognized by the international fund industry. That's why I think these measures will also help the family office to set up the family office structure and investment structure in Hong Kong.
Thank you, Jing Jing. It looks from your conversation saying the number is very encouraging, since so far we've got more than 500 registrations in terms of the LPF.
550.
550 to be exact. So it looks very encouraging to have the LPF registered in Hong Kong on the basis of the cost, the much easier operations, and also the efficiency. So one more question for you, Jing Jing. Do you see that LPF, in response of the GBA, the Greater Bay Area, the new development of this particular piece, that would help further increase of the numbers in the next 12 months? What do you think on that?
Oh, definitely. I think the measure that you're talking about, I don't know whether you're talking about the 18 measures that was just announced in September. I'm not sure whether anyone here is aware of that, but at the beginning of September, FSTB in Hong Kong and the Qianhai Administrative Bureau together, they jointly issued a policy called 18 measures. And if you don't know, you can just search 18条 or 18 measures. And that 18 measures, the purpose is to further promote and facilitate the cross-border investment between Hong Kong's funds and Shenzhen-based fund, because Shenzhen, they have QDIE, QFLP, and Hong Kong, we have OFC and LPF. And in that measures, they particularly mentioned LPF. So they want to facilitate the LPF or the managers of LPF to set up fund management companies in Qianhai. And they will lower those requirements, speed up the approval process, and they will broaden the investment scope if it's an LPF. So this morning I still have a call with the Shenzhen Qianhai Administrative Bureau talking about the policy. They are working because those 18 policy are quite high level principle, and the government on both sides, they are working very hard to iron out some details, guidelines, and I would say it's very positive that if those guidelines out, it will be much easier for Hong Kong-based LPF to set up QFLPs in Qianhai, and also they also encourage this Qianhai-based VC funds to use QDIE to invest, to use LPF for their offshore investment. So this LPF, and actually we are the Shenzhen Private Equity Association and our Hong Kong LPF Association, we are working together on a project, and so that which will provide those theoretical basis for the regulators to come up with more policies to support the development of LPF. Yeah, and also that 18 measures also mention Hong Kong family office, so they want to attract those Hong Kong institutions, including family office, to set up a presence in Shanghai. And they give the subsidies as well. So they will give it the award if you set up family office or fund management company in Shanghai. Based on your paid-in capital, the award could be up to 50 million RMB. Yeah, and for family office, set up an office, there will be an award of like 1 million RMB. So a lot of government incentive there to, and really it's because the joint issuers, FSTB and the Shanghai Administrative Authority, so it's really to promote Hong Kong's fund structure, Hong Kong's family office, and Hong Kong's fund management industry. Yeah.
Thank you. I think the key is to use Hong Kong
Yes.
as the fund structure. That's the message I think Jing would like to express. And thank you for that, Jing. With that in mind, I think family office development is very positive with the LPF and also the upcoming tax concessions. So my next question is to, I think, Karina. In terms of the key considerations for family office, you have experience in helping them a lot over the last your career life. What are the key considerations when they are setting up the presence? Locations. What are the factors that they need to consider? Would tax be also one of the key considerations that they need, heavily review before they would decide? So please share your insights.
Yeah, sure. Based on our experience, the setup of a single-family office has to start with assessing the key objectives, your service target, and also the scope of services. So, and then the next thing is you need to take into account of where to set up a single-family office, and designing the holding structure, and also completing the necessary registrations according to the compliance requirements. And most of the time, single-family office will also do a pilot run before full implementation, and subsequently consider allocation between in-house and outsourced services. For example, in information system setup, the financial reporting, asset management, etc. And throughout considering the holding structure and applying tax concession, it is important to ensure that the regulatory framework will not overburden the single-family office with tedious compliance procedure and substantial operational costs and constraint. And depending on the unique circumstances of the family and the family office, you may also need to consider whether to outsource and what to outsource. And of course, outsourcing can bring great benefits in cost efficiency and access to know-how. However, certain activities must be kept in-house for confidentiality and family office independence reasons. So it is important to strike a right balance between in-house and outsourcing services. And ultimately, the goal of a family office is to provide the most effective services in the most efficient way while avoiding or mitigating operational risk. And lastly, it is recommended to put in place a family constitution for family governance purposes. And although the constitution may not be legally binding, but it helps to establish the key principles of the family members. For example, how to hold the asset together, what information and by whom the decision should be decided, and also how to set the KPI for measuring the success of single-family office, and etc. And what information and how often will you share the information with the family members. So it needs to take into account both regulatory consideration and operational consideration.
Thank you, Karina. So in terms of setting up a family office, there are regulatory, financial, as well as operational considerations. In terms of the upcoming tax concession for family office, do you think it would be very attractive, good enough to attract more family office to come over to Hong Kong, to set up the presence, get tax tax benefit. What do you think?
Yes, because under the proposed regime for the single-family office, qualifying income derived by the family-owned investment holding vehicle, referred as FIHV, which is exclusively managed by the single-family office, will be tax-exempt in Hong Kong. And there are a number of advantages of applying the tax concession. Firstly, the concession provides tax certainty on the investment income, which is needed by ultra-high net worth families. And second is the tax concession is available to both local and overseas families, as opposed to the unified fund exemption, where there is a deeming provision applying to the local investors. And thirdly is there is no pre-approval requirement to obtain or enjoy the tax concession, and no special financial reporting for the single-family office, apart from the annual filing with the Hong Kong IRD. And lastly is the qualifying conditions under the regime I consider is very friendly and quite reasonable. For example, the minimum AUM of 240 million Hong Kong dollars and annual spending of at least 2 million Hong Kong dollars, and it only requires at least 2 full-time employees to manage or operate the single-family office. So in my view, I think the tax concession is very competitive, and it help to enhance our competitiveness in developing Hong Kong as a family office hub. And to promote the family office development, it's a pleasure for EY to work with Invest Hong Kong to produce a family office booklet and conduct video shooting for some of the well-known single-family office principles. Together, they're insightful sharing. I'm personally very impressed and inspired by the sharing. So stay tuned for the final product. And I'm sure that you'll gain some insight from there.
Thank you, Karina. For information, actually, the videos that we've been working closely with EY, with family office in Hong Kong, local, overseas, they are considering or already set up in Hong Kong. We have the support from EY to get some videos taken with each of these prominent family office, so you can have a look. If you have a chance, along the corridor, you'll be able to see the TVs that are the videos taken with the family office. So my last question, Karina. So in short, we are, in Asia, we know who are the competitors, in terms of family office. So with the LPF, Jing has highlighted, and also with the tax concession that's upcoming to be approved by the LegCo. So I think, what's your view? I just want to ask your views. We are very attractive in terms of attracting family office to Hong Kong, right?
Yeah, we are. I think we are very positive about because Hong Kong, we have a well-established business environment, and the upcoming tax concession, which provides the tax certainty, as mentioned earlier. So it provides a solid foundation in developing an ecosystem of family office in Hong Kong. So, my view is, only be better.
That's good to hear. Jing, what's your view?
I'm always confident, and especially on this time, because in September I went to Singapore for 2 weeks, and I talked to the local people, local service provider, and share views with them. And surprisingly, most of them, they still have 100% confidence in Hong Kong, and they also appreciate in the last few years all those. Hong Kong in the past decades, it's been conservative, but in the past two or 3 years, they've been more proactive, and especially now they want to pursue all those new areas like ESG impact investment, green financing, and yesterday the Financial Secretary Paul Chan said it will build up as a hub for virtual assets as well. So I'm very excited for the future of Hong Kong. Yeah.
Thank you for the support.
Yeah, I would like to add to that one as well. I just came back from Singapore, and I've been asking, when is Hong Kong going to launch the scheme? So it's like a lot of noise out there chasing us to launch our scheme, so the appetite is still there.
Thank you. Andrew, actually the question that I would like to ask, but you answered that anyway. As a practitioner in the financial industry, in particular, helping the family office, your company has been helping, in terms of the products like insurance, trust, etc., etc. So how would you describe a family office ingredients? How it would be benefit from Hong Kong, in particular, the practitioners like yourself. Would you mind to share your insights?
I have prepared something for these questions, but when I got to the venue today, I think all the answers are in this handbook here. I spent 15 minutes and all my points are actually written down here, so I don't think I need to repeat. Good job, Family Office.
Thank you.
Family
Actually,
Office Hong
this
Kong.
booklet is published in conjunction with Hong Kong Monetary Authority, as well as Financial Services and the Treasury Bureau and the Financial Services and Development Council. So 4 of our parties, including Invest Hong Kong, we published that last year. So we will have this to bring along with ourselves to any duty visits, roadshow, etc., etc. But thank you for that comment, Andrew. Thank you very much.
Maybe I just borrow a few points here and elaborate a little bit more.
I can share that with you, soft copy.
No, send us more copies. Well, I mean, in terms of the ingredients, okay, it's here, okay? Have a quick look. And a few points that I would like to highlight is first of them is the professionals, okay? The amount of talent pool in Hong Kong. A lot of you, or some of you may know that I'm a Formula One fan. I like to associate family office FO with F1, right? So in F1, in order to drive a successful car, you need a group of really, really good mechanics. And we are the mechanics. In Hong Kong, we have a lot of these seasoned, seasoned and professional in Hong Kong. And why do I say that? It's just not that we are all qualified, but we have gone through the 1997 kind of crisis, .com crisis, SARS, 2008. We've been through all this. All these professionals been through with the client, all these different scenarios, ups and downs. And Hong Kong has a long history of being a trading port. And we have many successful families in Hong Kong whose business have already passed from one generation to another. So all these professionals here have a lot of different experience, okay, in the belt. And in terms of the professionals, these professionals, they are both externals, and I would say they're classified into external and internal. Okay, externals would be the lawyers and accountants and people like Jing and Jefferson. Internal will be those key ones that have been in the families for many decades. These people has a lot of valuable experience which we can benefit from, and Hong Kong has all this. And the second thing will be the Hong Kong robust legal system. We have a lot of cases to reference on, so that we have the legal certainty in Hong Kong. And the third one, I would say in Hong Kong, would be Hong Kong food. Okay, I've been away for 2 weeks, and honestly speaking, I miss the food. And if I have a comment on this one, maybe elaborate 1 page on the food in Hong Kong. No, I mean, the reason I'm speaking about this is I had a conversation, my partner Tony and I had a conversation with one of these wealth planners in the bank. They said, okay, setting up a family office in Hong Kong, are we targeting the investment or are we targeting the family members? You see what I mean? So it's actually both. So I see there are a few pages here in this book that talk about education, the lifestyle in Hong Kong. There are a lot of hiking trails. I think all these are good features in Hong Kong because we don't want the mechanic to come and go. We want the mechanic to come here and stay so that we can continue to develop a very, very good car. And our aim is to develop a second driver, right? We want the car to be continued. We want to develop a second driver. So I think all these are the main ingredients in Hong Kong.
Thank you, Andrew. If I can summarize your points, actually Hong Kong is not just good at wealth generation, but also good at legacy transfer, as well as leveraging Hong Kong other specific features, for example, the lifestyle stuff, M+, the New Palace Museum, as well as the food, hiking trails, everything. Hong Kong has all the ingredients for the family office to set up and grow here. And just a quick one, Andrew. What do you think about the current policy and upcoming policies in Hong Kong? Would that be helpful in, shaping and even enhancing the family office overall ecosystem? You mentioned about talent, a number of other things. So in terms of the current and upcoming policies, are you confident, and also, this is very attractive to other family offices from around the world to Hong Kong?
definitely. And allow me to use the Formula One concept again. All right, we are driving fast, and then we see there's a cloudy up ahead. So we need new legislation. We need supports from government sometimes. Okay, and with the new scheme, probably, okay, we know it's raining, and then we can go into the pit and change the tire to a wet tire, for example. All these are helping, in terms of factors, and we can always leverage on our experience to move forward. I think, yeah, Hong Kong would be a very good place for all this setup here.
Thank you, Andrew. Now, if I can transition to Jefferson. So I know actually you had a plan to Singapore during this week, and you purposely canceled because of this event. So this demonstrates how you are passionate about Hong Kong, how much you love Hong Kong. As a practitioner, because you are actually expert in helping EAM business. As a family office incubator, your office and your company provides them with all the facilities, including advisory on licensing, physical rooms, and also conference, as well as the catering services. I went to his office, excellent office, nice, very nice one. We have sea view in Kowloon. So as a family office incubator for this industry, what are the challenges and also the opportunities that you see, in terms of helping them to set up, from a small EAM, then how, grow into a bigger MFO or SFO, then what's your experience? If you don't mind to share with us, pain points and advantages.
Sure, thanks for the question. So Fargo Wells, we grew up as a family office, and we are still as a family office, but we built up a business line, try to be a platform to incubate more and more family office and the EAM in Hong Kong. Because, as you said, I think the opportunity is very obviously to be a family office in Hong Kong, tremendous market, close to China, a lot of the wealth generated from in Hong Kong. A very huge demand to have an independent team to serve the client's money in Hong Kong. So it's very obviously. But in the meantime, I think the challenge is also very obviously at the same time, because if you want to be a family office in Hong Kong, you needed to set up a company. You needed to get a license if you needed it. You got to recruit people. You got to pitch clients, investors. You needed to adapt the innovation or technology. You need to negotiate with different counterparties or manage your supply chain, right? It's a very long journey, and it's very expensive as well, right? I'm not saying financially. I'm also saying mentally it's very expensive as well, because in Hong Kong, there's no such a thing like a CEO camp or entrepreneur camp. Nobody tells you how to run company. Nobody tells you how to be a CEO, right? And so I personally, I went through all the journey, and I believe Andrew also went this journey. I'm not sure whether you enjoyed it or not, but as one of the founders of family office, I think the whole industry, especially for the newcomer of the industry, needed some guidance and needed some coaches. I think it needs this kind of coaches very heavily. So this is also the reason why a few years ago that we launched a Fargo space in Hong Kong. We tried to incubate multi-family office and EMs in Hong Kong. Actually, we successfully made 7 cases already, and also with a lot of help from the Invest Hong Kong. Thank you very much for your support. But I do see the challenges comes from the whole environment. We don't have the systematic support for the new joiner to become a family office in Hong Kong. So I think this is the reason why we want to do this incubation. And by doing the incubation, we are not only to do the licensing application. We also help the family office we ask the family office to kind of to outsource, just as Karina, you just mentioned, that we ask family office to outsource some level of the middle and back office to us. We collaborate with some FinTech company to overall to improve the whole automation level of the whole family office industry. So I think a lot of them need to be done, but we are still in the early stage. And if you ask me what can we do more, it's definitely if we want to be facilitating more family office in Hong Kong, we definitely need this support from the government, from the regulator, and from all the stakeholders like service providers here today, so that the whole ecosystem can be more completed.
Thank you, Jefferson. Speaking of your trip, you just canceled because of our event. Thank you so much for that, for your support. So, as I asked the rest of other speakers, if you take Hong Kong versus other cities around Asia, so what are the the challenges and opportunities? If they set up here in Hong Kong, any favorable that you can share with them? Why pick Hong Kong? Why not other cities in Asia?
Yeah, so my trip go to Singapore still will happen this end of this month. So
Postponed, right?
Yeah, it is. It's because we 2 years ago we launched our Singapore office. So I also have operation experience between Hong Kong and Singapore for the family office business. So I probably have in a position to saying a few in your comments about the advantage. Have family office in Hong Kong. As I mentioned, Hong Kong is a very big market. We have a bigger IPO market, so a lot of wealth generated here, and it's very obvious reason. But I think one of the reasons, just as mentioned, Karina and Jingjing mentioned before, I think the talent pool is also very important here in Hong Kong, because I experience both in hiring people in Hong Kong and hiring people in Singapore. I think the thing about talent pool is not that deep enough in terms of of course, right now, suddenly you got so many family offices happening, set up in Singapore. So actually, it's the talent pool is in short, definitely. But if you look into the advantage in Hong Kong, you look around here, you got the best bankers, traders, lawyers, accountants who speak the same language with the clients, who can really understand the client needs very well, right? So I think Hong Kong has the best best talent pool, including the professionals. So I think this advantage is irreplaceable. Although we see a lot of trend, a lot of money flow into different other countries like Singapore, but I believe that it's difficult for other countries to build up such an advantage, to build up such level of the depth and the breadth of talents like in Hong Kong. I think it will take decades to do so. So that's why I'm also pretty confident about Hong Kong's family office business here.
Thank you, Jefferson. I think right now, in view of time, we may need to have the Q&A section. On the floor, if there's any question, please raise your hand. We have the distinguished speakers here today that would be able to provide free advice. May not be very deep anyway, but at least there's a chance here. Anyone? No? Wow. Silence. So it looks like, oh, okay, there's a question over there, please.
Thanks. Actually, all the panel speakers talked about Hong Kong and also your plan or already visit Singapore. So I think that can we give a little bit more specific comparison? I think that Karina definitely can do that. It's from tax perspective, right? So if you compare with Hong Kong and Singapore for those family office tax incentives, how you compare with that? And in other from legal or other financial services perspective, I think that can you, the speakers give some more specific analysis?
I'll speak from a tax perspective first. Our concession in Hong Kong actually, I see is very competitive. As I mentioned before, we do not have a pre-approval requirements to enjoy the tax concession, whereas in Singapore, the say 13O, 13U, it requires pre-approval from the MAS. And also our relevant threshold or minimum AUM annual spending are actually lower than that in Singapore. And also from in terms of the people to be employed by the single family office only requires at least 2, whereas Singapore requires at least 3, and 1 out of which must not be a family member. So I think our tax regime are flexible enough and to provide a tax exemption or concessions for the family-owned investment holding vehicle.
Jing, if you have any views?
I will add that if you, just look at the number of the fund setup. Hong Kong, Singapore introduced this limited partnership structure back in 2009. So now it's 13 years. And if you look at the total number of limited partnership funds set up in Singapore, it's less than 700. So 700 in 13 years. We are 550 in 2 years. So that's the difference. And also, as Karina just mentioned, Singapore's, actually their policy is much more strict, much more stringent than Hong Kong in terms of qualification for tax exemption. And recently, they increased the threshold, right? And also, there is also an uncertainty of policy. A lot of people mention there is a lot of uncertainty because it's all determined by MAS, and they always change. And when they see a crowd is coming to Singapore, they make it harder, right? And whether it's immigration policy or other tax incentive, they all change. They always change to their benefit, to benefit the Singapore and their local people. And as Andrew and Jefferson just mentioned, the talent pool, I think one of the biggest challenge that the financial institution, asset managers, they are facing when they move to Singapore is the people, because really there are a huge lack of financing people. And Hong Kong, if you look, because Hong Kong is very close to mainland China, and especially this year, I think the government also expanded the quality migrant admission scheme, right? They increased from 1,000 to 2,000 in 2020, and from 2,000 to 4,000 last year. So I think it will facilitate, and especially if you look at the talent list of Hong Kong on the web on the homepage of government homepage, there are 13 categories of talent. Four of them are related to wealth management and financial service. So I think Hong Kong is always a very attractive place for international financial talent, and it will be that way in the future, I think. So that's why I think, and I talked to the Singapore, the local fund managers and financial and service provider. They are saying that Singapore is like 15 years behind in terms of financial infrastructure compared to Hong Kong. So it's a long way for them to catch up. But of course, Hong Kong, we don't just stay here. That's why we have to move quickly as well, and to keep our advantage and edge. Yeah.
Thank you. Andrew, if you have any?
Yeah, just to add on those points there, I think as an advisor, what we do, for example, in Lion, we had a case where a client wants to set up a trust for a US and a Canadian beneficiary. So it's not like just going to the US, just give me a plan for US beneficiary, right? So in the space of the family office, right, the client may have a family office set up in Singapore, correct? But I heard one of the panelists just mentioned, in fact, quite a bit of the investment are still in Hong Kong, or they are planning to set up a business in China, right? So Hong Kong is still a gateway into China and in Asia. So I think it is always a good way to analyze the actual objective of the clients, right? Where the investments are. And again, I have to point out the lifestyle, where they're going to spend, send their kids to, right? So I think all those are good value, good points as well to consider.
Thank you, Andrew. Jefferson.
Sure. I'm not in a position to say from tax perspective, but I'm saying that as a market participant, I'm definitely welcome a lower tax, right? As low as possible, right? But from what we can learn, I think from Singapore experience, I think in Hong Kong side, I think we can, if we want to promote more family office business here, I think the government side, you should work more closer, not only for for one department, but across department. You need to involve to immigration, for example. You need to involve the IRD. You need to involve into even academic, right? For example. So I think it should be a comprehensive solution to attract people, including some lifestyle stuff, some even food, right? To attract people, to attract the talents, stay here, living here, and to make contribution here for the whole industry. So I'm saying that it's not one or two departments work. It should be a total solution. Yeah.
Thank you. I fully agree. A concerted effort is needed across the agency. And the fact that family office is not just benefiting a particular sector, but also benefiting across a number of other sectors, including lifestyle and consumer, FinTech, and startups. I think if I can summarize today's discussion, a few points, with the strong government support on the various measures, including LPF, the tax concession, which compared to Singapore, much easier in terms of the qualification requirements and also the applications, because it doesn't require approval. It's just a simple registration. And in terms of non-financial aspect, because family office not just focus on financial aspects, but also non-financial aspects, for example, the food, the hiking, and also Formula here, Rugby 7 is coming, and also talent is one of the key factors in driving and promote and attracting family office to come here to Hong Kong. I think in my view, promoting and also attracting family office it's not just from the government saying, but not just from one voice, but we also need to work together with the private sector, the stakeholders, the partners, all the speakers, and also the audience in the room here today. If we can work it out together, obviously our future will be even much brighter and better. So thank you so much today for the speakers. Give a big applause to them. Thank you. And also for the audience of today, thank you for your time and the effort to come here. If you have any questions, after the meeting, please feel free to ask any one of us here, and also myself. My team will be, waiting for any of your inquiries just outside the room. Thank you.